Hey, Talk Takers listeners, welcome back. Today we're going to be diving into Omega Healthcare Investors Q4 2024 earnings call.
Yeah, they've had quite a year, and we're here to break down what it all means.
For you.
Exactly, for you, the investor.
Okay, so let's set the stage with the headline numbers.
Okay.
Omega's revenue climbed to $279 million in Q4.
Right.
That's a jump from $239 million the same time last year.
Healthy jump, you could say. What's interesting is where that growth comes from.
Yeah.
It seems like new investments that they made throughout 2024 played a big role. Along with some operator restructuring, there were some asset sales too.
Right.
But overall, pretty solid.
Right, and when you look at the cash flow, it's even more impressive.
Okay.
Their funds available for distribution,
Right.
or FAD, came in at $0.70 per share.
Per share, yeah.
Now, why is that a big deal?
Wow.
Because they issued a bunch of new shares in Q3, which usually dilutes earnings per share.
Right.
But in this case, their FAD held steady.
Yeah, that's a sign of financial strength and smart management.
Yeah.
You know, think of FAD like the company's take-home pay.
Okay.
After all the bills are paid.
Yeah.
The fact that it didn't shrink despite more shares outstanding tells us they're generating strong cash flow.
Right.
Which, for investors like you, is crucial because
Yeah.
a chunk of that FAD gets paid out as dividends.
Exactly. So even with more shares out there, the amount of cash available to pay dividends is holding steady.
Right.
That's good news for income investors.
Yeah.
And speaking of the future, Omega providing guidance for 2025,
Okay.
projecting adjusted funds from operations, or AFFO,
AFO.
between $2.90 and $2.98 per share.
Got it.
Now, AFO is similar to FAD,
Right.
but it takes into account some non-cash items.
So their guidance is based on a key assumption.
Okay,
No change in operator revenue on an accrual basis.
got it.
Basically, they're expecting a stable operating environment for their tenants.
Okay.
At least for now.
So nothing crazy.
This doesn't mean things can't improve, but it does suggest a cautious outlook.
Makes sense.
Uh-huh.
Now let's talk about their financial health.
Right.
Omega has always been known for its strong conservative balance sheet,
Right.
and it looks like they're sticking to that.
Absolutely. Leverage is down. They ended the year with over $500 million in cash on hand.
Wow.
And they've got plenty of borrowing capacity under their credit facility.
Okay.
It's like they're building a financial fortress ready to withstand any storm and pounce on opportunities when they arrive.
And they're not afraid to use their equity to make those moves.
Right.
They invested $340 million in Q4, funded by issuing 11 million new shares.
Wow.
Markets seem to like that move, though, as those shares were issued at over $40 a pop.
That's a clear sign of investor confidence.
Yeah.
That shows they believe Omega can put that capital to work effectively, even though it means slightly diluting existing shareholders.
Okay, now, for the part that really piqued my curiosity, Omega's big push into the UK market.
Yeah.
I mean, a whopping 68% of their new investments in 2024 were across the pond.
Huge. What's driving this strategy?
Well, they've highlighted strong operator relationships and attractive investment opportunities as the main drivers.
Okay.
You know, think of it like this. They see a market where they can get more bang for their buck, both in terms of real estate and partnerships.
And it sounds like they're not done yet.
Not done.
Their pipeline for 2025 is leaning towards even more UK deals. But with their usual focus on smaller to mid-sized acquisitions, where real estate is a key component.
They definitely love their bricks and mortar.
Yeah, they do.
This raises some big questions for me.
Okay.
Is this UK focus a short-term play based on current market conditions, or is this a sign of a long-term strategic shift?
Right.
And what are the risks associated with concentrating so much investment in a single overseas market?
Yeah, I think it's smart to be cautious and consider those questions.
Yeah.
Now let's shift gears and talk about how Omega's operators are performing.
After all, their success is directly tied to the financial health of these tenants.
Right, and here we're getting a mixed bag.
Okay.
Overall, EBITDAR coverage is up, which is encouraging.
Okay.
EBITDAR is a measure of a company's earnings before interest, taxes, depreciation, amortization, and rent expense.
Got it.
So higher coverage means tenants have more breathing room to cover their rent payments.
Right.
This suggests they're recovering from the pandemic and in a better financial position.
That's good news, for sure. But they did mention one operator, a specialty hospital, with coverage below 1.
Yeah.
That sounds a bit concerning.
It is, but it's important to note that this operator isn't typical of Omega's usual tenants.
Okay.
Specialty hospitals tend to have more volatile earnings.
Right.
So this situation isn't necessarily a red flag for the broader portfolio.
Okay.
Still something to keep an eye on.
Right now, how about some familiar names? Maplewood, for instance. They've been a bit of a roller coaster ride for Omega in the past.
Indeed, they're still working towards paying full rent, but occupancy is climbing at their key 2nd Avenue property in New York City.
Okay.
This suggests some positive momentum, but we need to see if it translates into consistent rent payments.
And then there's Levi still navigating bankruptcy proceedings.
Yeah. The good news is that Omega is receiving full contractual rent from them, at least for now.
Okay.
But bankruptcy situations are inherently unpredictable.
Right.
So this is another situation that warrants close monitoring.
Definitely. So we've covered a lot: financials, the UK expansion, operator health. It's a lot to process.
It is.
And it makes you wonder what it all means for investors like you.
Yeah, before we jump into that, I think it's time for our favorite segment.
Ah, yes, This Is Not Financial Advice segment.
Always a wild ride.
Are you ready for my outrageous yet plausible trade idea?
Hit me with it.
Okay, based on what we've learned today, I'm thinking short GBP/USD and long OHI.
Okay.
If the pound weakens further and Omega keeps capitalizing on UK opportunities, that could be a win-win. Of course, this is just a hypothetical scenario, so please don't take it as actual financial advice.
I admire your boldness.
Always do your own due diligence, folks. Now let's bring it back to you, our listeners.
Right.
What does all of this mean for your investment decisions? Or even just your understanding of the healthcare landscape?
That's the million-dollar question, isn't it?
It is.
Let's break down what we've learned and connect the dots.
Okay.
From what we've seen, Omega is playing the long game. They're focused on strong operators, favorable real estate deals, and keeping their balance sheet flexible.
Right.
This disciplined approach has served them well in the past and positions them to navigate whatever challenges come their way.
Yeah, but that UK focus does raise some questions.
It does.
Is it a temporary opportunity grab or a fundamental shift in their long-term strategy? And if so, what does that mean for investors?
Excellent point.
And then there's the ever-present uncertainty of U.S. policy.
Right.
We've got a new administration with a lot on their plate, and healthcare is always a hot-button issue. How might potential changes in Medicaid funding or regulations impact Omega's future performance? These are things investors need to be thinking about.
Absolutely. There are a lot of moving parts here, and it's important to consider all angles. But remember, we've only just scratched the surface.
Right.
There's much more to explore in Omega's earnings call transcript and their supplemental materials.
We encourage you to do your own research, read between the lines, and come to your own conclusions. What stands out to you from what we've discussed so far?
Yes, what piques your interest? What raises concerns or sparks new questions?
We're always happy to engage with our listeners and delve deeper into these topics. But for now, let's take a quick breather. When we come back, we'll dig a little deeper into some of the key themes and unanswered questions that emerge from this earnings call. Stay tuned.
Welcome back to Talk Tickers. Before the break, we were unpacking Omega Healthcare Investors' latest earnings call, and we started to uncover some really interesting trends and potential challenges for you to consider.
You know, one thing that really struck me was Omega's commentary about the skilled nursing facility industry as a whole.
Yeah.
They seem cautiously optimistic, but they definitely acknowledge some headwinds out there.
Yeah, they highlighted the ongoing recovery from the pandemic, with occupancies approaching pre-COVID levels, which is a positive sign. However, staffing shortages remain a major concern, particularly in rural areas.
Yeah.
This is something we've seen across various sectors, but it's particularly acute in healthcare.
It sounds like this staffing shortage isn't going away anytime soon. What does that mean for Omega and its operators? What are the implications for their bottom line?
Well, for starters, staffing shortages can squeeze operating margins.
Okay.
It's simple economics. If it costs more to attract and retain qualified staff, profits can take a hit. And if operators are struggling, it can become harder for them to meet their rent obligations. So that's something Omega has to watch very carefully.
But could this staffing crunch also create opportunities for Omega? What if this shortage actually benefits the operators who are well managed and can attract top talent?
Right.
Could that give them a competitive edge?
That's a great point. It definitely creates a potential advantage for well-run facilities.
Right.
With a strong reputation. Think about if you're a skilled nurse or healthcare professional. Wouldn't you rather work in a facility that's known for treating its employees well and offers a supportive work environment?
Absolutely. It's all about identifying those operators who are ahead of the curve and proactively addressing the staffing challenge,
Right.
whether through innovative recruitment strategies, competitive compensation packages, or investments in employee training and development.
And that brings us back to the importance of Omega's underwriting process.
Okay.
They need to be incredibly thorough in assessing the operational capabilities of their tenant,
Right?
especially in this environment. Are these operators adaptable? Are they forward-thinking? Do they have a plan to navigate the staffing challenge? These are critical questions for Omega.
Speaking of challenges,
Yeah.
we can't ignore the potential impact of U.S. policy changes.
Yeah.
Omega's leadership acknowledged a lot of unknowns with the new administration.
Yeah.
Healthcare is always a politically charged issue, and changes in policy can have ripple effects throughout the industry.
Right. There's a lot of speculation about potential reforms to Medicaid,
Yeah.
which, as you know, is a major funding source for skilled nursing facilities. Any changes to this program could significantly impact Omega's tenants and ultimately their ability to pay rent.
So what specific changes are people talking about? I know it's all very preliminary at this point, but any insights you can offer would be helpful.
One of the ideas being floated is block granting Medicaid,
Okay.
which would essentially give states more control over how those funds are allocated.
Okay.
This could be a game changer for skilled nursing facilities,
Right.
depending on how each state chooses to prioritize healthcare spending.
It definitely adds another layer of complexity. And then there's the issue of the staffing mandate. We know there are legal challenges underway, but the outcome is still uncertain.
Omega's management expressed optimism that the mandate will be overturned,
Okay.
either by the courts or through legislation.
Uh-huh.
They believe the potential cost savings to the federal government make a strong case for repeal.
It sounds like they're cautiously optimistic.
Yeah.
But realistically, there's a lot of uncertainty. It's like navigating a maze blindfolded.
Exactly.
How do you plan when you don't know what's around the corner?
They're trying to walk a fine line.
Right.
They acknowledge the potential risks, but also highlight their strengths and strategies for mitigating those risks. It's a balancing act for sure.
So zooming out a bit, what are the key takeaways for investors listening in right now? What should they be paying attention to?
Well, first and foremost, Omega is financially solid.
Okay.
They have a strong balance sheet, good access to capital, and a track record of prudent management. These are all positive signs.
They're also diversifying their portfolio with this move into the UK market now. Whether that proves to be a winning strategy in the long run remains to be seen.
Right. There are always risks associated with investing, overseas currency fluctuations, different regulations, political uncertainty. These are all factors to consider.
Uh-huh.
But Omega seems to be approaching this strategically, building relationships with established operators and focusing on real estate-heavy deals,
Okay.
which is consistent with their overall approach.
We also need to be realistic about the challenges facing the skilled nursing facility industry as a whole. Staffing shortages, regulatory uncertainty, and potential changes to Medicaid funding could all impact Omega's performance.
Absolutely. These are headwinds that investors need to be aware of. But on the flip side, Omega's track record, their financial strength, and their focus on partnering with high-quality operators suggests they're well-equipped to navigate these challenges.
It sounds like a classic case of high risk, high reward.
Yeah.
There's potential for growth and income, but there are also some significant challenges to consider.
It's not a simple equation.
Right.
It's about understanding both the risks and the potential rewards and having a clear investment thesis. Do you believe in the long-term viability of the skilled nursing facility industry?
Right.
Do you have confidence in Omega's management team?
Huh.
And are you comfortable with the level of risk associated with this particular investment?
Those are the questions investors need to grapple with, and the answers will be different for everyone,
Right.
depending on their individual circumstances, goals, and risk tolerance.
Exactly. There's no one-size-fits-all answer in investing, but by carefully analyzing Omega's earnings, call their financial statements, and the broader industry landscape, investors can make more informed decisions that align with their own needs.
It's all about doing your homework.
Yes.
But that's what makes investing so fascinating. It's a constant process of learning, evaluating, and making judgments based on the information available.
It's like solving a puzzle piece by piece.
Uh-huh.
And with each earnings call, each news article, each bit of data, we get a little closer to understanding the full picture.
Well said. And I think we've managed to put together quite a few pieces of the puzzle today, but there's always more to learn and more to analyze now. I know our listeners are probably eager to hear what we think they should be watching for in the coming months.
You rub my mind. Let's dive into that right after a quick message from our sponsors. Stay tuned.
Welcome back to Talk Tickers. You spent this episode dissecting Omega Healthcare Investors' latest earnings call, and now it's time to look ahead. What should investors like you be watching for in the coming months?
There's a lot to keep an eye on first and foremost. I'd say operator health is key. We saw some positive signs in overall EBITDAR coverage, but remember, there are a few situations that need close attention.
Right, like Maplewood and their journey back to full rent payments, and how Levi navigates their ongoing bankruptcy proceedings. Any hiccups there could have a ripple effect on Omega's earnings and ultimately your potential returns as an investor.
Exactly. So you'll want to keep an eye out for any news or updates on those specific operators beyond that. I'm really curious to see how Omega's UK investments continue to unfold.
Yeah, me too. How much more capital will they deploy there? What kind of deals are they striking? And how are those investments performing compared to their U.S. portfolio? These are all questions you should be asking as you follow their progress.
Don't forget the U.S. policy landscape. That's the big wild card hovering over everything. Any changes to Medicaid funding or regulations could significantly impact Omega and the entire skilled nursing facility industry.
It's a reminder that even when a company is financially solid as Omega, external factors can play a huge role. So how can investors stay ahead of the curve on this?
Stay informed, keep up with healthcare policy news, pay attention to proposed legislation or regulatory changes, and think about how those changes might impact Omega's business. It's all about connecting the dots.
And while we're on the topic of financial health, let's not forget about Omega's balance sheet. They've been very prudent so far. But how will they fund future growth, especially with this UK expansion in play?
That's a great question. Will they continue to utilize their equity and issue more shares, or will they tap the debt markets? Their financing decisions will give you valuable insight into their outlook and risk appetite.
It's like reading between the lines. And speaking of insights, I'm always eager to hear what management has to say about their long-term vision.
Me too. Are they doubling down on the UK, or are they exploring other growth avenues? What are their thoughts on the evolving healthcare landscape and how they plan to position Omega for the future? These are the things that can really help you understand where the company is headed.
So as we wrap up this deep dive, what's the biggest takeaway you want our listeners to remember?
I think it's this: investing in a company like Omega Healthcare Investors requires a deep understanding of both the company itself and the industry in which it operates. It's not a passive investment. It demands ongoing research, careful analysis, and a willingness to adapt as the situation evolves.
It's about being an active participant in your financial journey. But hey, that's what makes investing so rewarding. You're constantly learning, evaluating, and making decisions that can impact your financial well-being.
Absolutely. And remember, Talk Tickers is here to help you navigate this complex world. We provide the insights and analysis you need to make informed decisions that align with your individual goals and risk tolerance.
We're in this together. We'll be back next week with another deep dive into an exciting company. Until then, happy investing and keep those brains ticking.